Hi, I'm Anthony Hendrickson, Dean of the Hyder College of Business. Welcome to beautiful downtown Omaha and this month's Mid-America Business Conditions Index. We've surveyed purchasing and supply managers in the 9-state region, stretching from North Dakota and Minnesota right down the center of the country to Arkansas and Oklahoma. Here to discuss the survey's economic outlook is Creighton University's economic professor, Ernie Goss.
Hello everyone and welcome to the Mid-America Business Conditions Index for the month of November. I'm your host, Paul Adey. Seated to my left, esteemed economic mind, Dr. Ernie Goss.
Thanks, Paul. Good to be here. We're talking about the Mid-American Economy Business Conditions Index for the month of November. Here we are on the first business day of the month, and of course this is a 9-state region from North Dakota, Minnesota, down to Oklahoma and Arkansas in the south, and the reading, which all these numbers are from 0 to 100, 50 being growth neutral, above 50 is growth positive. That's true for all the numbers. So there was, it continues. It's sort of scary. This, by the way, this is sort of the canary in the coal mine, and I'll just tell you, the canary's doing okay. There's nothing to be right now. Not too much to be concerned about, but we'll talk about that on our later on in this
in the
video.
show.
Yes.
Let's jump right into it with both feet, Dr. Goss, the overall index for the month of November.
Yeah, it sank a little bit. Sank's too strong a word. It dipped. How's that? From October's strong reading, it falls to 57.2 from 58.8 in October. That's good. I mean, I'll call it a Goldilocks economy, at least for now. Again, we've got pockets of weakness, and that would be in agriculture. And a lot of folks are saying, "Well, wait now. You're saying on average everything's good." That's like a person has a hand in the refrigerator and one in the fireplace. On average, you're okay. But the problem is, are you in the fireplace or are you in the refrigerator? Well, agriculture's in the refrigerator. The rest of us are in the fireplace, sort of. So it was a good reading for the month. And it was the 12th straight month we've been above growth neutral, so that's very good.
Fantastic. I'm still caught up. I love the refrigerator fireplace.
Well, I got more of those.
I always learn
I only got a few. That's a little inside baseball from economists.
I love it.
Yeah, right. And here I brought up a chart showing in beautiful Creighton blue there.
Strong Creighton blue.
Creighton blue, strong Creighton blue, and it's looking good. U.S. number there in red is also good. That'll come on. The U.S. for November will come out later on this morning. We didn't have that at the time of this recording, so it's looking good.
Any thoughts on where that national number might be?
I think it's going to be good. I think the economy is somewhat surging. We saw the GDP numbers, the revised numbers came out yesterday. It's hard to find many negatives, but we economists, we search for those negatives. That's what we dwell on, actually. So I'll talk about the negatives later on.
I don't even want to ask how your Thanksgiving was.
Oh, Thanksgiving was great, and it was great for America, across America. Now, retail sales are not that strong, particularly in-store sales.
Sure.
Brick and mortar, online, good online. So I think overall retail sales are going to come in okay, maybe 5 to 6%. Now, that's pretty strong by historical standards.
Great transition to the next metric, the jobs number.
Jobs number. Oh, the number was still above growth neutral, 53.6, and that's up from 52.9 in October. Of course, that's good. And when we talk about jobs, Paul, 1% growth year over year, that's for all the states combined. And that's for the region. The U.S. number is 1.4, so the region's not growing jobs like the rest of the U.S., so that's a concern, and a lot of that's due to agriculture.
But what about that unemployment number being so low regionally?
That's a problem. I mean, a problem is not for those who are looking for a job, it's for those who are trying to recruit employees, and that's always an issue in this part of the country, for that matter, the rest of the nation. And of course, what that does is push up inflation, and our inflation gauge for the month, 71.4, down a bit from 75.0 in October. And I characterize it as a Goldilocks economy, meaning not too hot, which would tend to push up inflation, push up interest rates, and not too cool, which would push up the unemployment rate and bring inflationary pressures down. So we're in a good range right now, except for agriculture.
Constant balance.
Yes.
And economic homeostasis, if you will, Dr. Goss.
That's a big word. I don't know if we economists are. I don't know if we're
It's
allowed.
science, so
we
I don't
can't
know.
use that. We're not allowed to use that word. That's too fancy for economists.
I almost couldn't get it out all the way. Speaking of homostasis, and so yeah, there you go. I did it. Maintaining
Twice.
that number. What do we need to watch for going forward?
Well, I think there are many things. Right now, exports were good for the month, 65.8, and imports 59.8. Those are good numbers. And also, we ask about, before we get to those risks, and that we did ask about support for the tax bill, and 42. The tax bill is winding its way ever so slowly through Congress. The Senate. The House passed it. The Senate's now dealing with it. 42.1 said they supported it. 19.3 said they opposed it, and then around 38.6 said not sure. So that's good. So, but you did ask about. I'm sorry for dodging the question.
It's pretty good.
That's what we do, economists, for a living, is dodge the question. But what to watch for? Wage numbers. We asked in the survey about wages going forward, how much they expected wages for their company and themselves to grow by, and they said 2.6% for all the companies on average. That's not bad, not good though. But wage numbers come out on December the 1st, Paul, and that's something we need to keep an eye on. It's been running about 2.4% year over year. That number gets stronger than that, say 2.7, 2.8, 2.9. That's getting in the inflationary range. You get more rate hikes. Short-term interest rates would begin to rise, so that's something to watch. The CPI number, Consumer Price Index, for November comes out December the 13th. That's been about 2% or slightly below. That moves up. A real concern simply because the Federal Reserve would raise rates. Now the biggie, when we economists sort of get together, now a few non-economists on the Open Market Committee, that's the Federal Reserve Committee that sets interest rates. There are a few non-economists on there, and we're trying to oust those guys and gals. We want it to be just us, a little insider. But yeah, they meet on the 13th of December. I hope they keep the loose lips sink ships.
That's another great one.
Not an economist, but not
general
from an
wherewithal.
economist. Yeah, that comes from somebody else. We economists, we're not that clever.
I've got one for you.
What's that?
Santa Claus rally. Any
Good point.
potential of that?
Not really. I think it's just we're Santa Claus rally in the stock market. It's already rallied. It's already going there.
Continues to rally.
I think it's being strong. That's something. Retail rallies, not so much. People are spending their money on things other than what's sold in retail stores. You spending your money in Bali or Mexico or wherever on a trip, or you spending it on something, adventures. Something we economists don't know a lot about, except adventures in numbers, our numbers. Yeah.
On a spreadsheet. It's the safety
right.
of the spreadsheet.
I can spend hours.
I just can't see you ziplining in Bali or something.
You don't know, Paul.
With like
We'll see. I got video.
With a beverage in hand, just taking it all in.
Beverage in hand, perhaps. Zip line, I don't know.
Out of the question.
Yeah, but you ask about risk and what to look for, and now risk. Boy, if that impasse on the tax bill, that's something to be really concerned about. It would be trouble, and trouble meaning that the stock market, and there'd be some ramifications there. And economically speaking, I think there'd be some ramifications there.
When would you expect to see those?
Or immediately afterwards.
January?
January, first quarter of 2018. NAFTA impasse. I said impasse. NAFTA is already at impasse. If it gets taken off the table, and that's a North American Free Trade Agreement. And I was just in Chicago doing a panel at the Federal Reserve in Chicago, and not to drop names, but I'll drop
excuse me, Dr. Goss.
Yeah, that's right. But we were talking there, presenting, and a person who knows far more than I do about the trade says he thinks it's gone. He thinks NAFTA's gone. And I'm like, everybody in the audience, including, of course, I, said that's unbelievable. That
Wow.
that's a real risk factor, particularly for this part of the country that depends so heavily on agriculture and sales to Mexico. And if we get replaced by Brazil and Argentina, not good. This needs to be done. We need NAFTA passed. And so that's a real risk factor. Venezuelan meltdown now. Yeah, go ahead.
It makes me hungry every time he says that.
You think it's a sandwich?
Meltdown.
You know,
I think it's a sandwich. Do you think it's a punk band?
I don't know. It's something not good. It means that the bond market for Venezuelan debt, it's now 40 cents on the dollar, around that, to 30 cents to 20 cents.
Wow.
That just creates international turmoil, so that spreads from Venezuela to Colombia, I don't know. But among the oil-producing states, there's always some risk there with in the price of oil and the supply of oil, and also the contagion to other South American, Pan American, Mid-America, Pan American economies, Central America. So that's a real risk factor. So but all in all, again, Paul, gosh, economists hate to be on the bright side. We get scared, you know, our knees get weak, you know, we're like, oh, this could just all unwind. Well, right now it's not unwinding. I won't call it surging, but the economy is doing real well. So.
Fantastic. Great way to end the year.
It is.
You know, once we get through December.
Well, we'll be back here on January.
We'll see each other again
first business day of
before the end of the year.
Yeah, and we'll report on conditions for December. Until we meet then, on the first business day of January, may your economic cup runneth over, and thank you.